our free cash flow over the next 3 years, at today's gold price, it's well over $350 million, after tax.
Which we are comparing to a market cap currently of about 160 million Canadian dollars.
Whilst the gold continues to be the core of the business, we have some uncapped upside and optionality with this lithium.
Alright, talking today with Thor Exploration, a really interesting company, a gold mining company operating from Africa. 3 different projects we need to highlight. First, of course, we have the operational gold mine Segilola. And then we have 2 exploration projects, a gold exploration project and a lithium exploration project as well. Just a quick overview of the numbers that we're seeing. During the first 3 quarters of 2023, the company produced roughly $13 million US dollars in net income. And they produced roughly $53 million US dollars in cash flows from operations, which we are comparing to a market cap currently of about 160 million Canadian dollars. So that's quite an interesting setup right there. Segun, welcome to the show.
Thank you for having me.
All right, then I would love to get started with the Segilola project, which is of course your operational gold mine. Could you perhaps give us your 30,000 feet overview of that project?
Sure, the Segilola project is our flagship project. It's a high-grade gold mine located in Nigeria. It was completely transformational for us as a company because we took the project from exploration through a preliminary feasibility stage, through a bankable feasibility stage, had the project funded, we built it through COVID, and now it's a producing mine. We've produced for the 2 calendar years now. It's a high-grade open pit project. It was the first producing project for us as a company. And also it was the first producing gold mine, large-scale gold mine in the jurisdiction of Nigeria. It was a real significant milestone as a project. Like you said in your introduction, it's cash flow generative. It produces very strong cash flows, particularly at these all-time high gold prices we're experiencing at the moment. To fund the project, part of our funding was a $54 million loan facility from the Africa Finance Corporation. That's going to be completely repaid this year. And then we start building up a very strong, healthy balance sheet from our very strong cash flows. The project has a mine life after this year of another 3 years, which is the reason why we're really focused on exploration. We believe we can extend that mine life. We're hoping to double the mine life as a minimum, both from exploring the region and exploring the underground potential of Segilola.
And I think Lars will be asking some questions regarding the exploration potential there, because it's quite interesting to say the least. Let's quickly talk about what kind of specs are we talking about with this gold project. How many ounces a year can you produce? What is your all-in sustaining cost? Those type of figures.
Sure. So the project, at the moment, we're producing an average between 95 and 100,000 ounces per year. Last year, 2023, we produced 85,000 ounces, and the year before we produced about 96,000 ounces. The reason last year was low, we always had it in the mine plan where we were always going to be doing a year of very high strip ratio. That came last year, but now we've opened up the pit and we're mining very flexibly. So we expect this year to be 95 to 100,000 ounces, and then the subsequent years to that to be around about 100 to 105,000 ounces. The all-in sustaining cost this year is between $1,100 per ounce and $1,200 per ounce, and we expect that to go down in the subsequent years as well. So it's a very robust economic project. It has a very healthy margin between our all-in sustaining cost and the gold price. At the moment, we're over $1,000 per ounce, and like I said, it gives us a very, very strong financial position.
A healthy margin, you can say that. It probably places you in the lower quartile of cost on the cost curve, which is of course very, very compelling for a potential investor. And we have this deposit. Let's talk about that for a bit. I believe you currently have roughly 500,000 ounces left in the ground at a grade that's pretty high up there in the grades as well, right?
Yeah, it's a high grade deposit, and one of the it's one of the easier deposits to process. There are no deleterious materials, no sulfides. We recover about between 50 and 60% of our gold just from gravity alone. And, because it's a high grade deposit, that's one of the reasons why our costs are in this lower quartile. So we're very fortunate with the ore body, and we hope we continue to perform with the process plant. And, the remainder of the mine life, we believe the margin will be very, very healthy. So if you look at, our free cash flow over the next 3 years, at today's gold price, it's well over $350 million, after tax, from a producing mine where we've already committed all the capital costs. There's no big capex requirements. Even if we don't find another ounce of gold, our free cash flow versus our market cap has a serious disparity, should I say. So we think there's a very, very compelling value proposition with our company.
That's great to hear. And talking about that ore body you mentioned, you still have a couple years left in gold contained. The pit structure I see in your presentation was modeled in 2021. How will the new rising gold price affect the contained ounces of gold within your project? And is there more drilling required, and are there more drilling?
Yeah, look, that's an excellent question. We did our feasibility study. I think gold was around about 1600 at the time. So, there's certainly scope to take the pit deeper before transitioning to underground at these gold prices. That is something we're actually, this modeling, scenario modeling, is actually something we're doing as we speak right now. So we're not at the bottom of the pit yet, but we'll be looking at, when that inflection point is to go from open pit to underground. And it's certainly now we can look at, even a $2,000 pit, would be a conservative approach, considering where the gold prices are. So we think there'll be more ounces in the open pit. But I think one thing I always like to emphasize is that we've never actually closed this deposit out at depth. We've drilled underneath the pit by quite a way and still had some very healthy intersections. 4 meters at 19, 4.5 meters at 18 grams per ton. We have 10-gram intersections. So now we're beginning to generate more cash. We're going to actually look at this underground potential a lot more seriously than we have in the past, where we didn't have that disposable cash. That underground drilling program will be commencing this quarter. So hopefully we'll have some good news to put out to the market over the next 3 to 6 months.
Great, because those previous drilling campaigns, at what depth was the maximum depth drilled there compared to what you're planning in the coming months?
Yeah, look, our deepest hole, I believe, is around about 250 meters, 250 to 280 meters, and we're probably looking to go about 100 meters below that as a first pass, and then if that works out, we'll keep going lower.
So some serious exploration upside there within your existing pit without going to near mine exploration targets, which I believe you also have near the Segilola project. Is that correct?
Yeah, we do. We've had some wins on the near mine exploration, small discoveries here and there, but nothing I would refer to as a slam dunk or home run in sporting terms. We're not quite there yet. So, we continue to look for something, 100, 200,000 ounces. What we have is, 20,000 ounces here, 15,000 ounces there, and aggregating them together, we've probably pulled together another year of mine life. So we want to get to a position at the end of the year where we can do a study on how best to mine from these various small discoveries, but the real focus and the real win would come into finding something, that 100,000, 200, 300,000 ounce size. And I believe there must be something out there. I don't think, just that 2 kilometers of 500,000 ounces is the only bit of gold in all that geology. So now we're really putting a lot of investment and expertise into carrying out the systematic exploration. We hope this comes through and we have some good news through the course of this year.
I think it might be good to stipulate that if you compare the Segilola project location, it is quite underexplored. If you compare that, for example, to Ghana or Senegal, because there are a lot of companies exploring for gold, and here it seems that there are not that many. So that might be, is that an upside that Thor Exploration is?
Yeah, look, that's exactly right. We're in an underexplored gold jurisdiction. We've built the first mine. We also have a project in Senegal. We see the difference there with the number of companies there that are carrying exploration, and there are a couple of producing mines there as well. So that has meant we do have a first mover advantage. We've built strong relationships. We understand the environment. We have a workforce. We have earth moving material there, enable us to move very quickly and flexibly. We have our own lab. We can turn around samples very quickly. So there's a lot of first mover advantage there, and we've been there for 7 or coming up to 7 years now. So we believe we can really capitalize on this first mover advantage.
All right, and I guess that moves us to Senegal, which is of course a country just a couple 100,000 miles away, where you also have an exploration project with already an identified resource. Can you tell us the 30,000 feet elevator pitch of that project?
Yeah, this project was a project we've had right from grassroots and put first holes in, taking this project to where it is now. It has a global resource of 1.78 million ounces. About half of that is indicated, and we're now doing preliminary feasibility study work streams on that. Unfortunately, our preliminary feasibility study has been delayed because, unlike Nigeria, the metallurgy here is a bit more difficult. And we've had logistics issues moving bulk samples around the world to get tested and finalize the process flow sheet. There is a big oxide component of this resource, which we continue to drill. That'll be the easiest stuff to process, and we try and increase that component of the resource while we're completing the preliminary feasibility study. A few weeks ago, we also mentioned we've picked up more ground in Senegal. On a contiguous license, and we believe our resource extends into this license. So we'll be carrying out a drilling program on the existing oxide targets in our license, but also we'll be extending our drilling into this new license with the view of getting a critical mass of an oxide resource and increasing the global resource by the time the PFS is completed. In Q3 this year.
All right, that makes complete sense to me. You started hinting at those oxides. Those are, of course, easier to process, but oxides are also close to the surface because they're the weathered rock that's close to the surface. So there's also a cost benefit there with open pitting that, right?
Yeah, look, if you look at some of our drill results, they're right from surface. We have a 7 kilometer strike length, a lot of it from surface as well. But it's unlike what we have in Nigeria, where we're blessed with 4 gram per ton material. Is we're looking between 1 and 1.5 grams here. This is more of a bulk tonnage style deposit, where, however, there's a lot of gold here. And Nigeria has high grade but a short mine life. This has low grade but looking like a 10, 12, 15 year mine life of 100,000 ounces per year. So, this is a fantastic opportunity for baseline gold production and cash flow for the group as a whole.
Yeah, so you're hinting that you want to explore this project and then bring it into production yourself, or what is the long-term vision of Thor Exploration for the Senegal project?
I think if we take a step back, we've built a mine in Nigeria. We have the mine building team. We have the mine building experience. We have partners such as the Africa Finance Corporation on the financing side. They can quickly help us finance a project, which, given that we have cash flow from Nigeria, will be a lot easier to finance and cheaper on a second project. We have an EPC contractor that's also a small shareholder of ours that built our project in Nigeria, that we have long-term ambitions with, that can help build our next few projects. So I think for us, the first point is we think to be very, very value accretive for our shareholders, given our relationships, our experience, the fact that we have the second project already in the group organically rather than going out to acquire is hugely value accretive. So our first strategic ambition would be to build this. Secondly, longer term, we're trying to turn into a West African and African gold producing champion. So we'll be looking at more opportunities, both organic and inorganic, that we can add. If we continue to generate strong cash flow from Nigeria and hopefully in Senegal, then we'll be able to make acquisitions of projects that are struggling to be built, that we think we can bring our expertise to, or projects that are in production that we believe will be a good fit for the company. So that's where we want to be. We, over the next 3 to 5 years, we want to be producing, between 250 and 500,000 ounces per year. And I think that's very possible given the fact that we're on the path in Senegal, and we keep looking for opportunities elsewhere in Africa.
Yeah, it makes sense using the knowledge you have with building mines and leveraging that into newer projects. So it's very interesting. Thank you.
All right, I guess that leads us to the third project that we have, the Lithium Exploration portfolio, also located in Nigeria, of course. Perhaps you can give us the 30,000 feet overview there as well.
Yeah, so with lithium, look, I think I always have to stress, first and foremost, we're a gold mining company and a gold producer and gold explorer. However, like I've said earlier in this interview, we are a first mover in Nigeria. So, that first mover gives us a number of advantages that I spoke about, but it also means that a lot of opportunities gravitate towards us. We're in a country which has very favorable geology for lithium and pegmatites, where we already have the in-country expertise and team. So when we started looking at the global lithium scenario and the fact we're already in Nigeria, this has come as an opportunity with fantastic optionality for us. We set up a subsidiary, and we've picked up a lot of prospective ground, now about over 700 square kilometers, and we started doing some initial exploration. Last summer when we started, we did some initial drilling, which was successful. However, we couldn't scale that as quickly as we had hoped. So what we did was we took a step back, and we started doing more grassroots systematic exploration. And that has actually come up with some very interesting results. It's come up with some anomalies that are drill ready now. And we are now rolling out a 4,000 meter drill program across these anomalies with the aim of getting a maiden resource this year over the next 6 months. So we're very excited about that. And once we have that maiden resource, we can start looking at the economics of whether it's worth putting in funding a small plant, or they can add to our cash flow and deliver shareholder value. It's all about delivering value at the end of the day. So we're extremely excited about that. It's we can fund that without diluting our existing shareholders. We can fund that at project level, whilst the gold continues to be the core of the business. That all our shareholders are invested in. We have some uncapped upside and optionality with this lithium.
All right, that makes complete sense. And I guess also an important point to highlight regarding this resource, normally lithium projects are measured in the parts per million, while you have some drill targets that are in the percentages, which is a whole different ballgame. Perhaps you can quickly shed some light on that.
We had 9 meters of 2.4%, 11 meters around about 2.6%. We've looked at rock chip samples, 6-7%, which is on the global comparative scale is extremely high. So we're very excited. If we can prove this up at scale, any level, it's going to be extremely value accretive for our shareholders.
Then a quick disclosure for the viewers at home. At this moment in time, neither Lars nor I hold a direct or indirect position in Thor Exploration. But of course, this company did show up in our screeners, and we are looking at making a potential investment. Segun, thank you very much for your time. Any closing remarks from your side before we end it off here?
No, just to say thank you very much. And you guys should really consider it. It's a very good value proposition. So make that investment.
All right. We'll definitely continue researching. Segun, thank you very much for your time. I appreciate it.